What's happening, everyone, and welcome back to the channel. If you woke up this morning and checked the charts, you probably did a double take. Gold smashing through $5,100 an ounce, and silver rocketing past $110. This isn't just a move, this is the biggest surge we've seen in precious metals. Well, maybe ever. Yesterday, gold closed up over 2%, hitting a record $5,100.32. Spot prices are holding strong above that $5,000 mark as global chaos continues to fuel the fire. And silver? The volatility is just insane. It spiked all the way to $116 before settling near $110, thanks to mind-blowing physical demand. Let's put this into perspective. We're talking about an 83% yearly surge for gold, and silver jumped 14% in a single day. Over in India, MCX gold has topped 1.62 lakh rupees per 10 grams, with silver at 3.75 lakh per kilogram. Investors are piling into safe havens, and these metals are shining brighter than ever. Is this the bull run of the century? Or are we seeing a peak before a massive profit-taking wave? Stick around, because we're about to break it all down. We've got the technicals, the mining stocks that are absolutely exploding, and my bold predictions for what comes next. If you're not holding metals yet, this video might just change your mind. Go ahead and smash that like button if you're bullish. Alright, let's dive into silver first because it is the undisputed star of volatility today. On Monday, spot silver touched $116 an ounce, a 14.6% spike, before pulling back to around $110. What's driving this? Breakneck industrial demand. We're talking solar panels, electronics, and electric vehicles. Industrial use now makes up 55% of total silver demand, up from just 40% a decade ago. This rally is just getting started. On January 23rd, it closed at 96.91, up almost 6% in that single day. Looking at the price action, silver is in a full-blown explosive uptrend, breaking multi-year highs on massive volume. Your key support level is $105. If it tests that zone, that's your buy the dip opportunity. Resistance at 115 was breached, so the next target is $120 as momentum continues to build. Meanwhile, COMEX inventories are getting absolutely crushed. Physical demand from India and Asia is pulling metal off the exchanges faster than you can say short squeeze. Reports show deliveries are surging, and eligible stocks are down 20% in just a few weeks. This is the classic setup for much higher prices. The technicals are screaming bullish. The RSI is overbought at 75, but it's diverging higher. The MACD just had a bullish crossover, and we've got a golden cross on the weekly chart. The stochastic is pinned at the top, showing no signs of a reversal just yet. And the sentiment online? The precious metals community on X and YouTube is on fire. You're seeing tweets like silver to $200 from accounts like Silver Seekers getting 10,000 likes. Channels like Silver Slayer are calling for a moonshot amid expected Fed cuts. Retail traders are about 80% bullish, hyped up on this industrial boom. But keep an eye on profit booking. After an 18% gain in January in India, we might see some cooling, but the global spot price remains firm. Physical market premiums are widening to 5 to 10% over spot in the US and Asia. Dealers simply can't keep up with demand. The bottom line is this: silver's dual role as both money and a critical tech metal makes it the ultimate leverage play. If gold holds 5,000, silver could easily blast to 130. Let me know your silver price targets in the comments below. Now, let's shift to the undisputed king, gold, which is hitting unprecedented highs. Yesterday, January 26th, gold surged to $5,100.32 per ounce. That's a 2.26% jump, right after hitting an all-time high of $5,107. Today's Asia Open saw it at $50.83, up another $25. For January alone, that's a 17.7% moonshot, and 86% for the year, all fueled by safe haven mania amid geopolitical wildfires. In India, MCX gold is at 1.62 lakh rupees per 10 grams, with weakness in the rupee amplifying those gains. The technicals are a textbook bull market. The 50-day moving average at $4,800 was completely crushed. We're now in a parabolic channel targeting 5,500. Your key support is at 4,950, which aligns with the Fibonacci 61.8% retracement. The RSI is at 72 with more room to run, and the Bollinger Bands are expanding, which means volatility is your friend. And who's buying? Central banks are hoarding gold, buying over 1,000 tons in 2025, led by China and India. They're basically printing money and buying gold like it's candy. The macro drivers are perfectly aligned. The dollar is wobbling around 102 on the GDXJ, and real yields are negative, which gold absolutely loves. Inflation is sticky at 3%, and while the Fed is signaling only 2 cuts, the market is pricing in 4, which will keep rates relatively low. Sentiment on X is exploding. Hashtag gold to 6,000 is trending, with analysts like Gold Telegraph forecasting 6,350 by the second quarter of 2026, and even 8,650 long-term. King World News on YouTube is shouting, gold's march continues past 5,100. Community polls are 90% bullish. Physical demand is off the charts. U.S. mint sales are up 50%, and India's imports have doubled. There's no end in sight. We saw some profit-taking after the new records were hit, but buyers defended that $5,000 level like champions. So what's the trading implication? Buy every dip under 5,050. Gold isn't just rallying, it's revaluing itself as the ultimate reserve asset. If global tensions escalate, we could see 5,500 next week. Hit that like button if you're long gold. Okay, let's talk about the miners, because this is where the real leverage explodes. The GDX, which tracks the senior miners, is up 25% in January, hitting $52 and outperforming gold's 18% gain. The GDXJ, the junior miners, is even wilder, with a 35% surge to $68 as explorers catch fire amid a frenzy of mergers and acquisitions. Top performers include Newmont, up 18% on record output, Barrick Gold up 22%, and Agnico Eagle up 28% thanks to their low-cost mines. Silver miners like Pan American Silver have spiked 40%, riding silver's run. Looking at the sector, miners are trading at just 1.2 times their net asset value. That is dirt cheap compared to metals being up 80% year-to-date. The all-in sustaining costs for gold miners average around $1,400 an ounce. With spot prices at $5,100, their margins are exploding to $3,600 an ounce in free cash flow. The GDX has a beta of 2.5 to gold. That means when gold moves 1%, the miners tend to move 2.5%. The sentiment on X is just as bullish. You've got accounts like Mining Stock King calling for GDXJ to $100. The consensus is that miners have been lagging behind the metals and have a massive catch-up rally ahead. My outlook? GDX to $60 and GDXJ to $80 if metals hold these levels. These are your potential 5x plays, so don't sleep on them. Subscribe for my weekly miner picks. Next up, the gold to silver ratio. Think of this as your trading crystal ball. It's currently at 51 to 1 after dipping from 53. A ratio under 50 means silver is in beast mode. Historically, extremes above 80 signal that silver is undervalued, and we're seeing a mean reversion from the peak of 120 to 1 back in 2020. At 51, silver is still screaming cheap compared to gold. With silver's industrial demand exploding, the ratio could target 40 to 1. That implies a silver price of $127 if gold just stays at 5,100. Watch for that 52 resistance level on the ratio. If it breaks down from there, silver is set to dominate. So what's supercharging this entire rally? First, geopolitics. Tensions in the Middle East and between the US and China are sending safe haven bids for gold past 5,000. Then there's Fed policy. The market is betting on 100 basis points of cuts by year-end, which is weakening the dollar and boosting non-yielding assets like metals. Central bank demand is surging, and talk of BRICS de-dollarization is going viral. The physical market is also tightening fast. Premiums over spot price have hit 8 to 12% for American Eagle coins, and inventories on the COMEX are plunging. There's just no papering over this physical demand. What a ride it's been. Gold at 5,100, silver at 110, miners are flying, and the gold-silver ratio is coiled for its next move. My prediction: I see gold hitting 5,500 and silver hitting $130 by the end of February if these macro conditions hold. If you're as bullish as I am, smash that like button, subscribe for daily updates, and let me know your top pick in the comments. GDX or GDXJ? Make sure to turn on notifications because our next video drops tomorrow. Stack smart, trade smart, and I'll see you in the metals revolution.